The Airbnb IPO is finally here. This week, most of us will have our first chance to own Airbnb stock, a company that qualifies as a true market disruptor. Today we'll take a thorough look at the company, how they make money, the details of the IPO, and I'll share with you my own thoughts on what I plan to do. So let's get settled in and talk all things Airbnb. Welcome to Healthy, Wealthy, and Wise, the channel that has evolved to talk about all the big and not so big companies going public. And this week is a big one for IPOs, and for the channel. We already had our IPO This Week episode that provided overviews to companies coming out this week, including Airbnb. Then we had a comprehensive video on DoorDash and their IPO, and now we're on to Airbnb. And later this week, we'll have a live stream. More details on that later. Whew. This week is keeping me from the holiday shopping that I know I need to do, but that's all right. Anything for all of you in the community that continually give me such great support. I really appreciate all of you. And for those of you new here, my name is Kevin, and I want to welcome you to the channel for the first time. And if you end up enjoying this video, we'd love to have you join our community. It's totally free. You just gotta press that little red subscribe button. All right, Airbnb. This has been one of the most anticipated IPOs to finally come out. We've had a lot of videos on them already, so if you haven't seen them, I'll link a playlist in the description for you if you'd like to catch up. Now if you have seen them, some of this will be a review, but I'll add updated information on the IPO itself and share my own thoughts on what I plan to do with Airbnb. Please keep in mind that while my videos are meant to be informative, they should not be seen as a recommendation for you to take any action based on the information or the personal opinions I share. You should always do your own research or consult with your own financial advisor when making any investment decision. Now, as far as Airbnb holding an IPO, there have been rumblings that they were going public over the past couple of years, but it never happened. But then, it looked like everything was coming together for a debut in the public markets earlier this year until, well, you know what happened. A pandemic hit that shuttered so many businesses, and Airbnb was among them. Bookings were canceled, staff cuts were made, and the company's valuation dropped big time. But then something crazy started to happen. While companies within the hospitality industry were struggling to exist, Airbnb started to make a rebound, and that's sort of the story of how this IPO still came to be. But let's go back a little further. Well, a lot further. 2007, in fact. That's when the founders came up with an idea to help pay their rent by renting out airbeds in their San Francisco apartment when an international design conference was coming to town and every hotel was sold out. Jumping on that idea, they quickly created a website, airbedandbreakfast.com, and booked their first guests. And apparently what ended up really making the concept work were two things. The first one being that they treated their guests like they were old friends from out of town and giving them a tailored experience what the city was all about. The second thing to making it work was figuring out how to make strangers feel comfortable enough to stay in each other's homes. And for that, they devised a solution with an online platform that combined host and guest profiles, integrated messaging, two-way reviews, and secure payments. At this point, we know the idea of Airbnb caught on. As of September 30th, the company reports to having had over 4 million hosts around the world in over 220 countries, with 86% of those hosts being located outside of the United States. Hosts have had 7.4 million available listings of homes through September, of which 5.6 million were active listings. And people were there to meet that supply. As for 2019, 54 million active bookers worldwide booked 327 million nights and experiences on their platform, with 69% of the revenue being generated by stays from repeat guests. And going back to their founding, the company reports that there have been over 825 million total guest arrivals on Airbnb. So if you're like me and have never hosted with Airbnb, you might be wondering how it works, such as how much money did the host keep and how much does Airbnb get? Well, the company gave us a glimpse to answering that question through an example in their filing. I've put up a screenshot that shows an example of how much money Airbnb makes from a $100 booking. To the host, Airbnb charges a 3% fee, and then on the guest side, they're charged a guest fee that, according to the company, can vary depending on a variety of factors, such as the booking duration or location. From this example, you can see that from a $100 booking, Airbnb makes $15, $3 from the host, and $12 from the guest. And that fee covers things like payment processing, scheduling, and other support services. So as a potential investor, this was helpful for me to get a better idea of how they make money with their business. So let's expand on how much money they make on a much bigger scale by taking a look at the financials. On the revenue side, looking at their last full years of reporting ending on December 31st, so this is before the effects of the pandemic, revenue grew to just over $4.8 billion in 2019, up 32% from 2018. Now, to include the effects of the pandemic, which we know is important to do, we can check out the last two columns of the screen and compare the first 9 months of 2020 and 2019, ending on September 30th. For 2020, revenue was down 32% from 2019 levels, from about $3.7 billion to $2.5 billion. What's also notable is how their net losses more than doubled in the same time frame. Now, net losses are nothing new to the company, as they've had a loss for every year since their inception. However, you can see how the pandemic really hit them hard when looking at the year-over-year numbers. Digging deeper into their numbers, we can look at two of their key metrics. The first is nights and experiences booked, and the second is gross booking value, which is defined as the dollar value of bookings on their platform in a period that is inclusive of host earnings, service fees, cleaning fees, and taxes. From this screenshot, you can see the positive trend in the growth of bookings from 2017 to 2019, a growth of about 175%. And you see similar growth in the gross booking value metric. But then again, those last two columns show the effects of the pandemic, where bookings in the first 9 months of this year were down about 59%. Now, considering what we've all gone through with this pandemic, with things basically coming to a standstill in the early spring, we knew bookings would be down. This just tells us by how much. The good news for Airbnb is that there was a bounce back in their business, particularly from May onwards. During those initial months of the recovery, Airbnb saw some trends in how bookings were different than in years past, in that domestic travel was recovering quicker than international travel, that travel destinations were stronger within 50 miles of a guest home than before, that stays were longer, perhaps driven by more work-at-home situations, and that travel outside of the top 20 cities booked in 2019 was higher than for bookings inside those cities, as people look to stay away from high-density areas. Now, what's interesting to me, as I've mentioned in a previous video, is that there was a very tangible recovery in bookings through July, where they recovered from 8.7 million bookings in April to 28.3 million. But then, as you can see on your screen, the numbers start to drop again, with 26 million bookings in August and then just 23.9 million in September. And with a surge of infections in the fourth quarter, it's likely that these numbers will continue to go down. So we can expect to see some more drops in revenue, which obviously isn't optimal as Airbnb heads into their IPO. In fact, the company is already projecting to expect greater year-over-year declines in nights and experiences booked and gross booking value in the fourth quarter than in the third quarter, also with greater year-over-year increases in cancellations and alterations expected. So right now, things aren't looking great, but as investors, we're always looking with an eye to the future. So looking forward, the company still sees a big market opportunity available to them. They estimate that their total addressable market to be $3.4 trillion, including $1.8 trillion for short-term stays, $210 billion for long-term stays, and $1.4 trillion for experiences. In their estimate, they do note that they are still using their 2019 data in their analysis, feeling that once the pandemic is past us, that those numbers will be the best representation of their long-term opportunity. Now, obviously, the company does face some risks. After this year, we know we can't predict them all, but there are some that we do know. One is competition, and competitors include online travel agencies and Expedia Group companies like Vrbo and HomeAway. Airbnb themselves also count the traditional hotel chains and other listing sites as competitors, even though the experiences they are offering are generally very different. They also look at how Google can list search results, giving preferences and rank to the companies that Google is affiliated with, so that someone searching for a destination may never see an Airbnb option unless they keep scrolling. Another big thing to consider is regulatory risk, and it's big. And it can be costly due to the fragmented rules and laws on short-term rentals, which can vary from locality to locality. Some laws could outright stop Airbnb from operating in one city, while another could charge huge taxes that make doing business there financially unacceptable. And the cost of just staying up on all the regulations is substantial, let alone being pulled into any litigation. And then they are also depending on their hosts to be ethical and law-abiding. Even just a small percentage of hosts doing the wrong thing could bring liability issues and really bad publicity to Airbnb, resulting in increased legal costs and a potential decline in bookings. So this isn't a full list, but you can see that there are many factors you have to consider with Airbnb. Before I go into my own thoughts on the company, let's go over some details of the actual IPO first. First of all, the company just recently raised their expected pricing range from $44 to $50 up to $56 to $60, as they believe there is demand for buying into the company, although they did end up lowering their offering by about 350,000 shares since they first announced expectations. The offering will now include approximately 51.6 million shares, with about 3% or about 1.5 million shares being offered from insiders. With the offering, the company plans to raise approximately $3 billion and be valued around $40 to $42 billion on a fully diluted basis, about double from where they were in April. The IPO is expected to price on Wednesday, December 9th, and public trading should then begin on Thursday, December 10th, where Airbnb will trade under the ticker symbol ABNB. And as to dividends, as common for most fast-growing companies, no surprise here as they don't plan to offer a dividend anytime soon, instead putting their earnings back into the company for the purposes of continuing to grow the business. Alright, now that we covered a lot of the information on the company and the IPO itself, what do I think about investing in Airbnb? Well, first of all, keep in mind this is just my own personal opinion, and you are welcome to either agree or disagree with it. So with that, I think there are a few main things to consider. The first are the risk factors I mentioned. As far as competition, it's definitely a consideration, but not one I'm immediately worried about. Right now, the company has such brand awareness that when someone thinks of a vacation rental, they most likely call it an Airbnb, even if it's a rental not through Airbnb. Just like Googling something versus doing an internet search. That brand awareness has been achieved because of all of the success that they've had and because they've gotten almost 1 billion overall bookings since inception. And I also believe that their guests are looking for something different than those looking at traditional hotels. And one of the things that has seemed to evolve in the age of the pandemic is that Airbnb rentals are not just seen as different than traditional hotels, but a perception that they're potentially safer, as you don't have to be exposed to people in the ways that you are in a hotel, with the dining rooms, the lobbies, and the most terrifying thing ever, the elevators. So because Airbnb has developed such a brand name and a level of awareness over the years, which I think can ultimately lead to a decreasing percentage of marketing expenses as compared to their revenue, I think the regulatory risk stands out as a bigger short-term headwind than competition. Airbnb is open to a lot of potential headaches and expenses here. Obviously, communities want to get their share of the revenue, and the traditional hospitality industry will lobby hard to make things more difficult for Airbnb. Of all the risks that Airbnb lists and the things that I can think of, this is the one that I feel could most affect the bottom line. I mean, when you think of the potential number of regulations and laws across over 200 countries and the thousands of cities around the world, it seems pretty overwhelming to me. The company needs to spend money on keeping up to date on the regulations as best as possible, needs to ensure their hosts are following them, spend money on lobbying on their behalf, the issues of liability, fees, taxes, and potential litigation caused by the thousands of regulations that would be virtually impossible to stay on top of. The company talks about risks in over 75 pages of its filing, but to me, this is the one that concerns me most. And yet, I don't feel like any of that's a deal breaker, although I can see if someone else does. To me, the innovation of a company that's made a lot of people feel comfortable in staying in other people's homes, something I would have had reservations about, plus so far, they've been able to navigate the minefield of risk factors. They built a model that most hosts like, as evidenced by the millions of people that have rented out their spaces. Now that's not to say that they love the terms or don't wish that they were better, but they were afforded an opportunity to make money in a way that wasn't as easily available before Airbnb came into prominence. There are so many people that have tried Airbnb as guests and have continued to go back again and again, and it's hard for me to discount that. While Airbnb may not be for all people, many others like the extra space, the affordability, and the uniqueness that each Airbnb experience has the potential to offer. When you have a model that provides benefits for both the host and the guests, that's a pretty compelling factor for me. And while you have the pandemic hurting the company in the near term, in the long term, I think this model can continue to succeed. And that alone makes me want to invest in Airbnb. But not at any cost, and most likely not right away. So here's where I'm at. As the offering has increased, it shows that there is a demand, which I completely get, if you consider the popularity of the company, the growth it's had over the years, and the interest from the average person who would like to invest in a company that they're familiar with. Now, if the stock came out priced right, I would consider jumping in early, but I don't see that happening. As some of you might remember, we discussed in another video back in October about the company's valuation of their stock on the private market. I'll link this one specifically for you in the description. In that video, we saw when adjusting for a stock split, and before news that the company was confirmed to go public, but with the understanding that an IPO was likely and probably factored in, each share in the private market was worth $34.88 on September 30th. So my gut feeling was, when considering the actual news of the IPO and giving it a bounce just for the increased liquidity factor of being traded on the public market, that a price in the $40 range made sense, although I figured it would probably trade higher. So I wasn't surprised at the initial trading expectations, knowing that institutional investors will pay only what they think the company is worth. And because stock trading on the private markets tend to involve investors that are insiders, I do tend to give credence of their assessment on valuation as a consideration. Now this also comes at a time before conditions where the pandemic took a turn for the worse in the US. And while we know vaccines are on their way, it's still going to take some time for enough people to be vaccinated before things really open up again, probably through almost the first half of the year. So here we are, where the company is going to go public with all the hype and the fanfare that an IPO brings while looking at a potentially rough couple of earning reports on the horizon. Now, guidance will probably be positive for the long term, but those numbers could scare some investors away. And within that time frame, when financials could be disappointing, we still have to consider the locked up shares expiring within this time period. According to the filing, 79.4% of their outstanding Class A common stock and securities are subjected to lockup agreements. Now, the locked up shares don't follow the traditional 180-day count as you can see on your screen. It's a little more nuanced, and we'll come back to this at a later time. But for me, on top of potential rough numbers being reported, you have early investors who may be looking to finally cash in on some of their shares, and I can see both of these conditions leading to potential drop in the share price. So barring the stock trading substantially below the upward revised trading range, which I don't expect, I'll have Airbnb on my watch list looking for a better opportunity to get into the better entry based on what I just shared. Now, there's obviously no way for me to know that the price will actually drop, so if you like the company and want to buy day one, don't let me sway you, because it's possible that the stock could just go up and up, and then you might feel that fear of missing out you just aren't willing to risk. And I can understand that thinking. However, for myself, I take the perspective that there's a lot of good companies out there, like I feel Airbnb is, but I'm not compelled to buy them at just any price. And I'm also not a fan of any company when I have my investing glasses on, which I have on right now. So I'm fine to miss out. I've been through this enough times to know that there's always another opportunity out there. Now, if that price doesn't drop from where it starts trading, I'm fine to wait through a period of time where it's unlikely to go up much, and then get in when financials are starting to trend where I see them having the potential to push the stock price up with the short-term risk factor of the pandemic out of the way. So my final verdict is that I would like to own Airbnb, but I'm probably waiting. So what do you think about Airbnb's IPO? Let me know in the comments. I always like to know what all of you are thinking. And if this wasn't enough, and you want to talk more about the Airbnb IPO, I'm holding a live stream on Thursday so we can talk about how Airbnb traded on that first day in real time. We'll have it at 7 p.m. Eastern, where I plan for us to talk about all of the week's big IPOs, including not just Airbnb, but also DoorDash and C3AI, and how they ended up trading. And we can also talk about whatever you guys bring up in the chat, so definitely hope you can make it. Now, if you can't, I'll post a replay so you can catch it when you can. Anyways, I hope you enjoyed the video, and if you did, please press that like button and share with your friends and on any of your social media sites and forums you're on. Anything you can do to help me grow the channel is greatly appreciated. And again, if you're new to the channel or just an occasional visitor, we'd love to have you join the community. It's totally free, you just gotta press that little red subscribe button. We'd love to have you on board. Until next time, thank you for watching and have a great day.